Hi everyone, this is Daniel here. I'd like to thank you very much for watching this RobinHood Mechanical Forex System video. The purpose of this video is actually to give you better understanding of the RobinHood Mechanical Forex System. If you haven't downloaded your RobinHood Mechanical Forex System manual yet, please don't forget to download it. It's very, very important. Although the video does cover a lot of information, there is no substitute for the manual. You'll have a much deeper understanding of the system once you read the manual and all the details that are contained in it. Alright, so let's take a look at what we're going to cover in this video. We'll first go over the system settings and explore the settings that you'll be using. And next we'll go ahead and take a look at the system rules. And then we'll cover some trade examples. And of course, throughout the training, I'll be looking at important points that you should know while you're using this system. Okay, let's go ahead and start with the system settings. And the currency pair we'll be trading is the Euro and the Great British Pound pair. And the reason for this is this pair is very suitable for this type of strategy. On the one hand, this pair is very volatile. Volatility is something very important when we are day trading. We need the price to move in order to make a profit. So it is volatile, but on the other hand, it's not too volatile, say for example, like the Great British Pound and the US dollar currency pair, or lately the Euro US dollar or US dollar CHF. So on one hand, the pair is volatile, but on the other hand, not too volatile, so you don't have unnecessary spikes that don't really mean anything. It's like the market can be moving in one direction and then suddenly spike in the other direction, but that doesn't necessarily mean that the trend has changed. Okay, this is a very important characteristic of the Euro Great British Pound pair. We will be trading on a 1-minute bar chart. This is our time frame. And the reason we're going to do this is that during the day there are many opportunities when you're trading on a 1-minute bar chart. This system is designed to take small profits out of the market, small consecutive profits out of the market. We're using very small stop losses, and that's the reason why we're going down to the 1-minute bar chart, which is very, very important as well when you're talking about profit objectives and stop losses. I'm the type of trader that doesn't like to suffer. Well, I don't mind having a few small losses, but I do mind taking a big loss, and that's very important as well. Okay, the stochastic. We're going to use two stochastics, and the first stochastic, you're going to set the K period to 120, and the second stochastic, you're going to set the K period to 15. In the manual, I go into more detail on the settings, how to set both stochastics, and I go into much more detail on MetaTrader, which is the platform I think you should use to implement this system because it's much easier to deal with MetaTrader, and I go into much more depth on how to do this in MetaTrader. So it's very important that you go ahead and read the manual. Okay, let's go ahead and dig into the system rules. We're going to start with the long trade rules, and then we'll move on to the short trade rules. Okay, long trade entry. We're going to start with how to enter your long trade. And the first criteria is that stochastic number 1 needs to be 85 or above. And that is very important. You will wait for stochastic number 1 to reach 85 or above, okay? When I say 85 or above, you'll not always be able to catch the stochastic right at 85. Sometimes it's going to be more, but it has to be at least 85. And stochastic number 2 has to be at 40 or below. So once stochastic number 1 is at 85 or above, you look at stochastic number 2, and once stochastic number 2 reaches 40 or below, you enter the market at that precise price. That's pretty simple, isn't it? Okay, so once you're in a trade, and we entered the market according to the rules that we described earlier, You're in a long trade now, and you immediately place your stop loss at 35 pips from entry price. This is very important. I don't recommend using mental stops, especially if you're a beginner. The stops are important, and they're an important part of your trading plan, and I do recommend that you use them, and that you don't use mental stops, and that you do actually place a stop loss with your broker in case, well, anything could happen. Your internet connection could suddenly fail, or you might just be in the kitchen making a sandwich for lunch, and suddenly the market changes and you lose a lot more than you want to. So please always place a stop loss order with your broker. Okay, so if stop loss is hit, we immediately look for a short trade based on short trade rules, which we'll cover a bit later in the video, okay? But that's it. If your stop loss is hit, then you're done with the long trade and you're going to move on and go ahead and look for the short trade. Okay, so we placed the stop loss and we're in the trade, correct? So now we need to focus on the profit objective. Okay, so the first option for the profit objective is 50 pips from the entry, or we go to profit objective number 2, which is stochastic number 2 reaching 95. So again, it's either option number 1 or option number 2 for the profit objective. This is very important. You do whichever happens first. If the profit objective stochastic number 2 reaches 95, but the market has not moved 50 pips, you go ahead and you exit the market. Or if your profit objective has risen to 50 pips and the stochastic number 2 has not reached 95 yet, you still go ahead and exit the market at that time. And after the profit objective has been reached, we look for a short trade based on the short trade rules. And we're going to cover these rules in the next video. So let's go ahead and move on to the next video, video number 2, and we'll look at the short trade rules and also some trade examples as well.